good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain, and for now, the closing trades have turned for the worse because the market has taken a bit of a tumble. In fact, in the last few minutes, there has been a sharp downtick in the Nifty. We're below the mark of 23,300 as well, and completely given up all the gains that we have seen, almost 130 point slide that we have seen from the top of the day. The Nifty Bank is also mirroring the move. It's a lower cut because it's just holding on in the green right now, but that tumble is clearly evident in the last few minutes. Let's pull up the broader markets as well. They're outperforming because they had been outperforming throughout the trading session, but they too have come off materially from the highs of the day. To the mid-cap index has taken a bit of a nosedive. Let's try and decode as to what is causing the pressure as far as the frontline index is concerned. It's clearly IT, which is one portion of the market which is coming under pressure. So your Tech Mahindras, your Infosys of the world, they are the ones which are down in the trading session because Infosys is actually the biggest drag on the index right now. It's contributing almost 30 points to the downtick. To add to that, M&M is not doing much. So after that stupendous rally that we have seen in the stock for the last 1 month, it's finally seeing a bit of a profit booking today. So that's down in the trading session. HDFC Bank, that's down 0.5%. And then the IT names, as I pointed out. What's batting for the bulls is Axis Bank. That's holding up with a 2% gain. And ICICI Bank too is showing signs of green. But overall for the market, it's been a bit soft. Kunal is also with us on the show. Kunal, what do you make of this sudden downtick in the market? We were trading quite okay above that 23,350, but a sudden tumble.
Yeah, nothing much to read. I think they're still broadly in a range. 23,300 is still held on to the index more or less. For the Nifty on the spot levels. Bank Nifty is again come back to that 50,000 mark, and I probably believe that over the next couple of days, the markets have to get into this range or a consolidation because there are so many factors which have changed for the markets in the last 4 days. Short covering led by strong breakouts in terms of key levels on the indices, strong sector churn which has managed to take play in the last 3-4 days, and different kind of sectors this time around, and not the usual ones like the PSU etc., which have been which were leading the rally in the previous rally. So when you see this kind of a market texture, it's bound to be that the markets after hitting new highs would probably get to a range of consolidation. But I believe that the action should be more stock specific going forward, at least looking at the short-term charts and the way the indices are panning out.
Right. Naresh, hi, afternoon. Where is it that you're seeing the pressure building up? I mean, it's obvious that IT has been the weak link from the word go, but what else?
So apart from IT, we are not seeing much of a pressure. We've just seen some bit of a, say, a sell-off a little bit from a 100-pointer uptick to, say, flat on the Nifty. But PSUs as such are finding a little more difficult in making a comeback strongly. So out there is some bit of a pressure. There is a little bit of selling on the upside. But apart from that, we are getting into a consolidation after the strong recovery in the last few sessions. So would be looking out for leadership, and banks and financials still look interesting.
Point taken. Shibani Sarkar Korean also with us on the show. Shibani, what part of this nervousness will you attribute to the uncertainty regarding the portfolio allocations at the cabinet level? Or do you think whoever gets whatever in terms of the various ministries, it doesn't really change the prospects at company level, at the index level, and hence one should completely ignore the noise which is coming in from the political scene right now?
Hi, good afternoon. So our belief is that now that the elections and the verdict is behind us, it's back to basics and back to fundamentals. So for India as such and for the markets, if you look at the 3 factors that were driving markets so far are largely intact. One is the macroeconomic parameters are strong. Second, corporate profitability, and as seen in for FY24 numbers as a whole, remains fairly strong, and corporate profit to GDP has been on an uptrend. And the third is domestic flows continue to remain fairly strong. So from that perspective, markets are holding up well in terms of fundamentals. The other question that we often encounter is on valuations. Now, it is true that India, relative to the rest of the emerging market pack, is trading at multiples, which is at a premium, but that has always been the case. So if you look at valuations being at a premium, but also corporate profitability like GDP growth has been surprising on the positive, and you've seen the numbers come through, which have been a little bit stronger than what was earlier anticipated. Now, if you look at market segments, clearly the risk reward continues to be more favorable where large caps are concerned and some of the larger mid caps. So if you look at the Nifty is now trading at a slight premium to its long-term average multiples, while mid caps and small caps as an index level are trading at a significant premium to their long-term averages. So we are continuing to believe that the domestic facing sectors are still very well placed. One has to be mindful of valuations. Look at companies where growth is intact but are trading at reasonable valuations rather than chasing momentum, and looking at companies where valuations are elevated.
Right, okay. Seems like some healthy consolidation on its course. But Kunal, does it seem like it could be an across-the-board pause? I mean, what about some of the select PSUs? What about FMCG and then private banks?
I think for PSUs, definitely it's a pause, because look at this way, that if the indices had fallen down from 23,300 levels towards 21,300 odd mark, and we've managed to recover almost the entire loss, PSUs have recovered just 50% of it. And I think most importantly, many of the PSUs, the likes of NTPC, ONGC, even the high beta ones like REC, PFC, etc., and many of the other names, they have recovered and they've come back to just the 50-day moving average and have not broken past about those levels, which means that there is a definite sign of underperformance, or the bounce is very weak into the PSU pocket. So I would believe that that could be a pocket which may underperform at least over the near term. And if we see some more signs of weakness into the larger cap names of the PSUs, we may actually expect many of these stocks to even correct by a margin of 5 to 7% broadly in the next 2 to 3 weeks. But I think FMCG, on the other hand, I think something which looks fairly attractive. So that 3 days, 3 days of strong up move for many of the FMCG names, HUL, etc., moving up higher, and then the stocks going to a pause for the remainder of the next 2 to 3 days, I think indicates that now these stocks have come back into a neutral territory in terms of indicators and charts, would be bullish on FMCG.
Okay, the market for you at the bottom of the screen, wherein the Sensex has taken a tumble of almost 600 points from the high of the day, and the other data points regarding Midcap and the Nifty will keep updating there, so keep your eyes out there because there's a definite slide in the markets. But Shubhani, the first signature that actually the Prime Minister put on was that Kisan Nidhi scheme. Does that give you any insight as to what could be the favor of this particular government? Is it going to be a lot more rural and populist in nature? And if yes, does it warrant a relook in terms of the sector and the portfolio allocation?
So our belief is that if you look at government policy, and of course we'll get to know more in detail over the next few days and then going into the union budget, but the government in terms of policy focus would continue pretty much along the same lines as what was happening over the last few years, over their last term. They will continue to look at fiscal consolidation. They will look at possibly the investment-led growth path. A lot of debate, of course, has been happening in terms of consumption and what happens on the consumption side, especially demand at the bottom of the pyramid, which continues to lag the premium end consumption. Now, even before the elections and the last time we spoke, our belief was that there are incremental some signs of recovery where rural and mass consumption are concerned. It's a slow and steady recovery. It's not a fast pace or a very V-shaped recovery. And maybe some support coming in from government side would also help in terms of accelerating the trends. Clearly, as you know, that real rural wages have been stagnant over the last maybe 5-6 years, but incrementally a few pointers. One is that as inflation starts to kind of moderate, real rural wages should see some uptick. Secondly, the expectations of a normal monsoon translating into better Kharif output would also help in terms of rural incomes and farm incomes, and that's something that we will wait and watch out for. If you look at commentary that has come through, especially where some of the FMCG players are concerned, the bottoming of rural demand seems to be well in place. It's a question of time as to when we start seeing that demand start to improve, and maybe some nascent signs are already visible. So our belief is that from a valuation perspective, if you look at the sector is trading at multiples which are lower than its long-term average history. And if rural demand does start to pick up, you could see some momentum and valuations re-rate in the segment. So on the FMCG side, we have been incrementally looking at companies that can benefit from this trend.
Cement, in fact, is one buoyant pocket this morning. Just earlier today, we were chatting with Vinayak Chatterjee as well, while it's, of course, speculation has been rife around it that perhaps GST on cement may actually be reduced, but it seems that chatter is now getting only louder. Ramco Cement holding up 5.5%. You've got Shree Cement up 4.5%. Ultratech as well higher by 3.25%. Naresh, any trading opportunity after the move cement has already seen today?
So it's just a start of a move in a lot of names. So something like Shree Cements, which looks interesting. The stock has broken out of the last 3-4 months range, about the 26,800, 27,000 mark. This could go towards the 30,000 mark in the short term. Same way, there is a Dalmia Bharat Cement, which has corrected from 2,400 odd levels all the way to 1,700 and has made a classical double bottom formation and is giving a reversal. So there are names which are breaking out on the upside like Ultratech as well. So the whole basket looks interesting at current levels, but I would go with Dalmia Bharat and Shree Cements at current levels.
On that note, listen into what Vinayak Chatterjee told us, because he said that 28% GST on something which is for nation building is clearly unreasonable, and there has been increased clamour around bringing it down.
I think there has already been reasonably vigorous, shall we say, entreaties to the finance ministry even before the last three budgets that the 28% GST on cement seems to be inappropriate, considering that it's an Aam Aadmi product, it's an infrastructure input, and taxing it at the sin road of 28% GST does not seem to be logical. So I am actually expecting in these 5 years the 28% GST on cement to be reduced substantially.
Okay, point taken. So that's the view coming in from Vinayak Chatterjee. In the meantime, taking stock of some other buzzers as well. You have FACT or FACT, which is higher. RCF is also trending higher. And this, of course, is getting a fillip from the agri push that we have seen with the Prime Minister signing that Kisan Nidhi scheme today. Intellect Design is doing fairly well. Happiest Minds within the IT space is also standing out quite tall. And then you had this Jana Small Finance Bank, which has been doing quite well for itself over the last few days. In fact, there were a couple of analyst meets that happened over the weekend. Kunal, stocks like SEAT, Zensa Tech as well as MGL were in focus on account of the commentary that came by. Anything on the charts that you would recommend?
So SEAT is something interesting. Tire stocks, in fact, apparently many of the tire names, Apollo Tire, Balkrishna Industries, SEAT, these stocks are coming back into a recovery mode. I would not say a major breakout mode. Especially for the likes of SEAT, because these stocks have been still trading low by their previous 52-week highs. I think 1560, 1600 was the previous highs for SEAT. And for these stocks have come back to their mild breakout points. But I believe that the likes of Balkrishna Industries is something which is very attractive. So the stock was one of the first ones to recover. I think the last week or the week prior to that, the stock had seen a good 10 to 15% rally from 2700 mark towards 3000, 3100, and then some choppiness around the 3000 levels. But the stock is again inching back towards a breakout at 3000 plus mark. So that's an attractive name to look out for. MGL, on the other hand, I would still be a bit iffy in terms of trading the stock, because of the way the stock is extremely volatile and choppy. Even today, for example, the stock opened with a gap up, but that did not sustain, and you've seen the stock selling from the intraday high level. So the fact that these stocks are a bit unsustainable when the stocks generally go into a sudden rally, I think makes the trade into these stocks a bit difficult.
Right, okay, on that note, we're going to take a very quick break. We've, of course, slipped sharply from the day's highs, but let's see how long it sustains, whether it stays here or whether this dip gets recovered and bought into. Back with closing trades right here in ET now, 0.5% lower. That's been the kind of fall that you've seen from the day's highs. We're down about almost 62 odd points. 23,295 is where we're currently at. Actually, no, it got covered into. We're now down just about 30 points and nudging into the green. It's HDFC Bank, ONGC, Tata Motors, IndusInd Bank, Bharti to some degree, and even L&T. They're the ones which are flickering in and out of the red to the green. And I guess that's what's going to define the way the Nifty moves. Even Reliance, for that matter, that's also had quite a choppy ride today. And that also has been recovering. And that's, I guess, playing out on the index too. That too dipped in the red and now bounced back another 0.4% or so. Kunal, let's get a chart check on Reliance, L&T, some of the poster boys of last week's rally or recovery, whatever you want to call it.
They still look very strong. In fact, Reliance is the stock on the large cap name which is making an attempt towards the 3000 mark for the fourth time in the last, I think, 1.5 or 2 months. I think in the month of March and April start is where the stock had started to get into that breakout around the 3000 levels, and this is the fourth attempt for the stock to try and inch back towards the 3000 mark. I believe that sooner or later, whenever the stock breaks past about the 3000 level, we could be looking at a 150 point rally at least for Reliance Industries, and that's going to propel the index also going forward because of the high weightage. L&T is also an interesting case because the stock had fallen down significantly from 3,800 to almost 3,300, 3,400 levels, and it's now recovered almost 50% of those losses. I think even at current levels of 3,500, the stock still looks very attractive. And as a short-term play, I would look out for targets in the range of 3,700 to 3,750 for L&T.
Okay, point taken. Shubhani, before we let you go, last question on the insurance sector, because that had seen a bit of a sideways move, but at a time when people are looking for value bets, does it warrant a look? Because my colleague Anurag will join us shortly and talk about the May data that has come in for life insurance. But clearly, the first tick suggests that it's a good growth coming in the month of May as well.
Yeah, so insurance has been a sector which has seen significant challenges over the last many years. One, of course, post-COVID, we saw impact on insurance companies because of mortality claims. Then you saw significant regulatory changes. Now, in fact, even now, one of the biggest reasons why sector is trading at multiples which are lower than their long-term averages is possibly because of the regulatory uncertainty, specifically that surrounding the surrender charge norms. Now, if you look at the sector, some amount of that growth in the sector appears to be coming back. That is reflected in the data that is coming out on a month-on-month basis. However, from a margin perspective, there has clearly been a shift away from products which are higher margin in nature, specifically the non-par segment, towards the ULIP piece, where because of buoyant capital markets, you've seen significant growth, where margins are lower than what it is in the case of non-par or annuity. I think for the sector, a couple of things are required for re-rating. One, of course, some amount of regulatory certainty come through, specifically on the surrender charge issue. Secondly, if you look at from a product perspective, growth coming back, specifically where retail protection is concerned, will be one of the key drivers for the sector. So as of now, we've been on a wait and watch mode, specifically given the fact that there is still some degree of regulatory uncertainty and pressure on margins because of the change in terms of product mix away from higher margin to segments such as ULIPs, which are lower margin in nature.
Okay, Shubhani, great to have you on the show. We'll let you go on that note. Good having you on the show as always. But, we've got an eye on the sky, considering much of the cues for the markets, political, of course, are out of the way while we're just awaiting the portfolio allocations. So let's try and find out what's the weather god predicting right now. We've got Soma Sen from the IMD joining in on the show right now. Soma, hi, great to have you on the show. Well, it's been pouring in here in Mumbai and parts of Maharashtra for the last 2 days. But tell me, what's the progress of monsoon looking like? When is it likely to hit Gujarat and the rest of the country?
Hi, thank you for inviting me to the show. Currently, we are expecting, we have already advanced monsoon today and now the monsoon line passes through Dahanu, Nashik, Aurangabad, and then to a previous line over stations over Nizamabad and then Sukma and Malkangiri. So, western side, rather over Maharashtra, we have advanced the monsoon line a little ahead. And we expect in the next 2 to 3 days, monsoon is likely to advance further into more parts of western Maharashtra as well as some parts of Gujarat.
That's good to hear. And it seems like, Ms. Sen, that the advancement of monsoon has been faster than expected, right? In Mumbai, for instance, it reached 2 days ahead of schedule. Are there more chances now that the monsoon is going to be better? Because earlier the estimate was around 104, 105%. Now, is it possible that it's going to be even better than that?
Advance of the monsoon happens in surges. And the seasonal rainfall has nothing to do with this advancement. There have been years when there has been delayed onset and monsoon rainfall makes up for the delay during the course of the season. So relating the two is difficult. All we can say now is that the peninsular India active monsoon conditions are prevailing, and that is how day by day, in fact, monsoon advanced over the entire peninsular India in some stations pretty much ahead of schedule. But we cannot relate it to the monsoon advancement further into central India, North India, nor can we relate it to monsoon total seasonal rainfall, which is predicted to be 104%.
Okay, so you're still sticking to 104% because you're saying there's no direct correlation as such. But Ms. Sen, is there a possibility or is there the expectation that the rains are going to be fairly widespread this time around and not like limited to certain pockets where there could be heavy rainfall? Is it expected to be a lot more broad-based, let's say the interiors of central India, western India?
Monsoon rainfall in general is widespread. That is how monsoon is different from all other seasons. You do not have very localized rainfall. Having said that, central India is the core monsoon region, and generally the rainfall here, especially during the active phases, is widespread, low intensity rainfall for longer periods, but extremely heavy rainfall episodes do happen. It happens along the west coast, it happens over the western Himalayan region, but that is something that one cannot predict very much in advance, in the sense that we cannot give a seasonal prediction of the number of extreme events. We can say overall the rainfall activity pattern and the forecast.
Right. Soma, great to have you on the show. Thank you so much for being the bearer of good news. It seems like monsoon is well on its course to now advance to parts of Gujarat in the next 2 days itself and the rest of the country eventually. Let's take in some closing ideas as well before we take a break. We've nicely recovered that little bit of a dip that we saw in the market. Kunal, any strategies that you may have?
So I'll go with Tata Steel as a buy. I think it's an interesting breakout for Tata Steel, and after quite some time the stock has come back to that 180 mark, which could be a very strong outperforming zone for the stock. In fact, at a point where many of the other leading metal names are actually going into a bit of a sideways consolidation to correction. So Tata Steel is what I would pick for the closing trade.
Okay, a buy on Tata Steel. Naresh, what's your idea?
So that would be a buy on Axis Bank, a clear leader in the private banking space as well as the banking space, was the first one to actually cross into new all-time highs before. Did not see a sharp correction, is now again showing relative outperformance, so expecting it to go towards all-time highs again.
Okay, let's take a very quick break. On that note, Ultratech Cement, Cipla, Hero MotoCorp, Nestle. It's a mixed bag of gainers out there, and of course Axis and Tata Steel as well, both Kunal as well as Naresh's closing ideas. Those stocks as well holding out pretty okay in trade. A bit of a recovery for the index. So while we did fall 0.5% from the session highs, we've recovered ground as well, nudging the green right now. Not conclusively enough, but we've made it back to that 23,270 odd kind of mark right now in trade. Cement, of course, is one of the biggest sectoral movers today. Pretty much all the composites of the sector are holding up well, and even chemicals is not looking bad. Aarti Industries, Coromandel, Chambal Fertilizers, GNFC, Naveen Fluorine, UPL. All of them are giving you very, very nice moves. And of course, Tata Chemical as well, holding higher by about 3.25% as we speak. Anshul Sehgal too joins in on the show right now. Anshul, hi, afternoon. Good to have you on the show. Let's start off the discussion with, in fact, chemicals, because not many on the street are convinced about the prospects of a turnaround for the sector. What are your thoughts?
Afternoon, Aisha. Nice to be with you. Thanks. Chemicals, over the last 2 years, we've seen everything that could be a headwind for the sector play out. Volumes came down because there was oversupply in the markets. Also, raw material prices went up because there was global inflation. Both of those impacted operating leverage adversely. Margins came down, and that impacted also stock prices because in any case, they were priced to perfection. Now we are seeing prices having corrected some margin of safety in this space. We are also seeing raw material prices cool off. Inventory in the system has eased off as well. So we may be, if not at the bottom, somewhere close to the bottom as regards demand patterns and also margins. This can't be anything but good for this sector, given that prices are also, stock prices that is, are also, leaving much on the table at this moment. So if someone is not investing for the next quarter, 2 quarters, and is taking a longer term view in this space, there may be many opportunities in this space to take advantage of.
Okay, there are opportunities in the entire chemical space, but Anshul, what's the view on Indigo? Last week we had seen that big upgrade come by from Kotak. Today as well, the stock is flying away up 4 to 5%. One part of the street believe that the best is over and the peak profitability is behind, but clearly the stock price is telling you something else.
Anisha, rather than talk about the individual stock, let me give you a broader perspective, and then we can all draw conclusions on the stock itself. Clearly, this is a market where you don't have pricing power. And so what will differentiate one company from the other is how well you manage costs. This company in particular is clearly more than a 50% market shareholder in the industry. And people go to a company in this space for two reasons. One, they get cheaper prices on their tickets. Second, they reach from place A to place B on time. And whoever does that well gets the bulk of the market share. Given that this company or a few companies in this space have exhibited these trends, clearly they will gather market share, and consistently there will be a shift of market share towards such companies. We also believe that whoever manages their operations, their entire supply chain well in this space, will be able to tide over cycles in this space. As we all know, raw material, which is petrol, ATF, that price goes up and down quite frequently in this space. And if you manage your supply chain and costs, you will manage your operations very well, which only a few companies do in this space. So, and also, in context of where India is, we are somewhere close to 400 to 500 aeroplanes, last I remember, versus I think China is about 10,000, or is it the US, which is 10,000? So we have a huge room to grow in this space. A few companies manage costs well. So it's quite clear that the opportunity size affords that a few companies will become much bigger than where they are today. And one should not again play for the 1 quarter, 2 quarters, just buy and sit tight for the long term.
Does this argument also hold for another market leader of telecom sector, Bharti Airtel, because it's become one of those 4 companies which has hit the market cap of $100 billion. So it's the 4th company of India to do that. And that stock is sitting at life high levels. And I know you don't want to stock specific, but Telecom, Airtel, does it go by the similar theory you talked about Indigo?
Anisha, again, this is a very interesting space. What we are seeing in this space is significant consolidation. When we used to, in the 2010s and around that period, have about 12, 13 players, profitability was quite weak, and there was significant consolidation. Number of players came down to 2 to 3. In fact, till recently, one player was also in the doldrums till they raised money only recently in the last 1 or 2 months. Given this situation, and given that there has been price cuts in this space, we used to be at 200 rupees ARPU. That ARPU number came down to as low as 110 over a period of time. And from there, we have traversed to about $200 again. This doesn't take care of inflation also in this space over this last 5 to 6 year period, since the large player, with deep pockets came into this space, which is Jio, in fact. Given where we are on ARPUs here, there is no room for ARPUs to go down any further, and every room for ARPUs to actually move up from here. And in commodity sectors like this, pricing determines where stock prices go. If prices of making calls and of data go up, clearly that will have a positive impact on stock prices as well. And since we have only a few listed players, of those, even lesser are financially stable. Those companies which are financially stable will benefit disproportionately, and that will also reflect in their stock prices.
Right, okay, let's detour for a bit. And just earlier today, we caught up with Milinda Karmarkar from Dalal and Brocha, and we spoke to him about his views on retail, considering he's been a big bull on the retail sector for quite some time now. Let's hear out his views.
If the retail interest is so high, that means brokerages will do well, PMS schemes will do very well, SIPs means mutual fund AMCs will do well. What are you betting on in terms of this rise of retail investor and the big beneficiaries of this rise of retail investor or stroke financial inclusion theme?
So, we have always been invested in banking. We have not taken a bet on asset management companies, and I'll tell you the reason for that. They will do well over a longer period of time, but shorter period of time there is a possibility, I don't know whether it will happen, that their fees may contract. If that happens, there could be some stagnation. Maybe we'll look at it at that point in time, but right now we miss the getting it into it early, but as of now we don't want to buy it.
Okay, so shifting focus to what's happening in some of the other stocks, Poonawalla FinCorp is actually coming under pressure. No incremental news flow as such that I can spot, but nonetheless, that stock is down 6%. Poonawalla FinCorp is the stock I'm talking about, and Aarti Industries is the other one, which is actually holding up quite well within the list of chemical names that we pointed out. Nuresh, Aarti Industries, Poonawalla FinCorp, any recommendation?
So Poonawalla FinCorp is still an avoid. Aarti Industry looks interesting for the fact that we've seen a small range breakout and it had corrected quite a bit from 770 all the way down to 600, 620 levels. So this could make a recovery towards 700. So it would be a buy on dips from here on. But 700, 730 would be a stiff resistance. So it's a extremely short-term trade with a stop loss below 630.
Right. Okay, that's the take coming in on some of the buzzing names. I also want to check in on Raymond, given the fact that they're looking to, develop the residential project in Bandra East, wherein there's a revenue potential of almost about 2,000 odd crore rupees. The stock started off the day well, but again, it's come off like the rest of the market from the day's high, still going good by about 3.5%. In fact, we should bring up the one-year chart for Raymond because the stock has been quite the performer, or for that matter, even the last 2 years. There's also an order win for Ward Wizard. They've bagged an order worth about $1.25 billion in the EV segment from Philippines, and that stock as well has been doing quite well, 28% higher as we speak right now. And then KEC as well, again a bunch of order wins. That stock as well has been seeing quite a bit of buoyancy. Okay, in fact, we chatted with the Ward Wizard management. Let's listen into what they had to tell us about this particular deal. We will play it out in just a second from now. But yeah, in this last 6 months, the stock has been, a lot more frugal again, I must say, 9.25% move. Today, of course, after that sizable trigger that they had with this mega order win. Of course, it's making up for the relative underperformance in the last 6 months or so. Can we toss across to that bite now? Yeah.
Top line, if you consider for this financial year, other than the order which we would be executing in Philippines, we are expecting somewhere around a top line of 650 crores with two-wheelers share of around 60,000 vehicles we would be producing, and three-wheelers we would be producing somewhere around 5,000 units. What I oversee is we would be doing around 25 to 30%. Our share would be towards export, and next financial year, I oversee that our exports would be not less than 50 to 60%.
Okay, that's the take coming in from the Ward Wizard management. But Anshul, where is it that you're seeing opportunity to deploy fresh money, if at all, or would you say just wait it out? The market has hit an all-time peak, and so have valuations pretty much across the board.
Aisha, I've been as I mentioned earlier on your show, I've been a professional portfolio manager. Now I manage personal capital, and so I can kind of see both sides and kind of gauge what position the market is in today. At least I think I can. I could be wrong though, but I have a feeling that at this moment, this is a market which is highly in favor of the individual investor, because the individual investor does not have portfolio complications to manage. And he can look at bottom-up opportunities without having liquidity concerns because he's not managing as much money as a professional manager. And there are dime a dozen opportunities where you can pick stocks which are reasonably priced, where the future looks quite bright, and investors are really not focusing on these pockets. Also, in our judgment, it is not valuations that prevent downsides. It is really earnings growth which prevents downsides. And the situation that the economy finds itself in today, as also the corporates as a result, we feel that there is earnings tailwinds which hasn't been seen in quite a long period of time, and those tailwinds will ensure that downsides will be limited in this market. With that context, let me tell you that I find a lot of opportunity in manufacturing, capital goods, some even in defense. I think that the rural sector is one space which is primed for a takeoff in the next, say, 6 to 12 months. Particularly discretionary plays in the rural space, those will see significant tailwinds because that is a space which has seen a low pleasure from the markets over the last 2 to 3 years. And we think that there is going to be an uptick in that tide coming in the next coming 6 to 12 months. We do also believe that financials are very attractively priced. If you noticed in housing finance itself, there has been 40% growth in recent times. Of course, there is the base effect because of HDFC merger. But aside from that, also housing finance is doing exceptionally well. While credit cards have eased off a little bit, but by and large, the banking space continues to do very well. In our judgment, banking and finance looks attractive. So there are ample opportunities in the market which don't appear expensive. You could find opportunities in banking space in the 5 to 10 times price to earnings range. I wouldn't call that expensive by any measure. So there are reasonable opportunities in the market to take advantage of.
Okay, so that's the point coming in on some of these select sectors and stocks. But let me toss it across to Sharad and try and understand what the buzz is in the dealing room because the markets are fairly volatile. In fact, Nifty is back in the red. Sharad, what's the chatter like in the dealing room right now?
Well, yes, in focus is Karur Vyasa Bank, and what we are gathering from the dealers is domestic institution buying is coming in the stock. Largely a PMS has added its position, as that's what the dealers have been talking about. Roughly 27 lakh shares have exchanged hands, which translates into 0.3% equity. Now the stock itself, if you look at it, the mutual funds are having 21% stake in the company itself, with the names of UTI Mutual Fund, Nippon Mutual Fund and ICICI Pru Mutual Fund having a significant stake in the company. The stock itself, but is trading at its lifetime high levels, and key triggers also is something which we'll be focusing for the stock. Q4 numbers are of course very strong, and it's expected that the earnings might continue in a positive manner for first quarter as well because of two reasons. First is a higher business growth is expected to come in with the combining a 4+% margins going ahead and favorable credit costs as well. Now even the analysts are estimating for FY26 itself, the company might deliver a 17% ROE, which is the return on equity. So overall, Karur Vyasa Bank is in focus as we are seeing domestic institution buying for the stock.
Okay, thanks Sharad for that. That stock had by a good 7% right now, but that's not alone. A lot of stocks to give it company. Z, for instance, has managed to see a spike of almost 5% in the last few minutes. Samil is one stock that has been doing very well for itself since the start of the trading session. Of course, all the cement names as well as Indigo has been in focus. UBL2 in the last few minutes has perked up. Tata Chemicals. So a lot of these are buzzers in the trading session right now. But one space which is clearly coming under pressure is IT. Emphasis is of course reacting to that large block deal that happened wherein 15% equity changed hands, but still managed to get good amount of buyers because the stock has managed to recover. And there was a note coming in from IFL Alternatives as well saying that the overall weightage can increase for MSCI as well as FTSE indices now in emphasis. So that stock is in focus, while the others like Coforge, Persistent, Infosys continue to be in the red. Nuresh, any bet from the IT sector that you would want to make right now?
So not really convinced on the sector as such, because whatever we see is we see a 2-day spike and then again we see a fall, at least in the large cap names. In the mid cap names, we have stocks that have corrected quite a bit. So something like a Birla Soft on declines looks interesting because it corrected all the way from 850 to 600 levels. So that could be a buy closer to 650 odd levels, and can expect a slow comeback here towards 720, 750. So that would be the only one as of now which looks promising.
Okay, emphasis in the meantime, that stock definitely has been lower. Remember that 15% equity changed hands earlier today in a bunch trade, and Blackstone is the likely seller around that 700 crore rupee mark. That, of course, is the worth of that 15% stake. But a lot of events in Mumbai, and Maharashtra Chief Minister Eknath Shinde inaugurated the northbound arm of the Mumbai coastal road from Worli to Marine Drive just today, similar to the southbound arm, which was open for vehicular movement in March this year. The northern arm of the coastal road will be operational only between 7 a.m. to 11 p.m. only on weekdays so far. Astha, my colleague, is here with the ground report.
Yeah, we are here in the Coastal Road Phase 2, which starts from tomorrow for the public. As you can see, Eknath Shinde is here to inspect the Coastal Road Phase 2. And he is inspecting all the construction projects, and it will be working after that. So the inauguration is taking place right now on 10th of June. And talking about this coastal road, it's just like the Phase 1. It has tunnels, it has cycling routes, and it's 6.98 kilometers long, and it will cut the distance from 45 to 50 minutes to 10 minutes as well. It will be very helpful for the commuters, and this coastal road Phase 2 connects Marine Drive to Hazira Ali Chowk. So this will be the project, the mega project. The Phase 2 opens today. As you can see, CM is right behind us. He's inspecting the tunnel. Also, Mr. Fadnavis is also accompanying him. We are right now in the tunnel, which is very customized made, vacuum-based tunnel this is. It has 3 lanes, especially for the ambulances lanes. Also, it has emergency exits where if there is any emergency, people can rush out of their vehicles and can get out from the gate as well. So this is a giant project which is being inaugurated right now by Mr. Eknath Shinde, who is the Chief Minister of Maharashtra, and we can see the cars lined up, and it will be inaugurated and will be open for the public tomorrow from 7 a.m. to 11 p.m. for 16 hours, and it will be operational from Monday to Friday for 5 days. As we are covering this tunnel, have a look around. This is the tunnel Phase 2, which will be open for the public for ease the traffic control in Mumbai.
Okay, so life of the commuters being made easier in Mumbai, but of course a lot of projects are underway. Let's see as and when they open up, but at least a part of the coastal road has started for the commuters as well. But as we were highlighting, the life insurance data of the month of May was quite strong. My colleague Anurag is now with us to talk to us about just that. Hi Anurag.
Good set of numbers shown by life insurance industry in month of May. As per the data released by Life Insurance Council, life insurance industry in month of May has shown a growth of 31% up to the month of May. Otherwise, if we talk about the only month of May, then premium growth is 15.15%. So if we talk about the listed players in the life insurance space, then ICICI Prudential has shown a growth of 31% in month of May. If you talk about the first 2 months, that is up to the May month performance, then ICICI Pru Life premium has gone up by around 10%. Another listed player, HDFC Life, has also shown a very good performance in month of May. HDFC Life premium has increased by 14% in month of May, and up to the month of May, the premium is up by around 10%. SBI Life has disappointed in month of May. So in month of May, SBI Life premium is down by 2.5% as compared to the last year, 2023 May. So premium stands at 2,354 crore against the 2,414 crore in May 2023. Biggest player in life insurance industry, LIC, has also shown a good growth. If we talk about the data of up to the month of May, LIC has shown a growth of 46%, and in month of May 2024, LIC's premium is up by 18.74% as compared to the premium LIC earned in May 2023. So good set of numbers by life insurance industry in May 2024.
Okay, that's a bunch of life insurance data, and let's just see what those stocks as well are up to. SBI Life, of course, hasn't had the best performance, but the rest of the pack should be holding up. HDFC Life has also been a key gainer. In fact, I think last week, Kunal, some of these stocks did make a move as well, right? I remember it was part of the recommendation list as well of a few experts.
Yeah, I think HDFC Life, SBI Life and ICICI Pru, I think all these stocks have recovered around 10% from their 3-day, 4-day swing lows. But the concern for these stocks is that they're still into a pattern on the weekly, monthly charts of lower highs and lower, tops. So I think low bottoms. So I think in that sense, I would probably expect that maybe this could be just a feeble rally for these stocks before they get back into a selling or a corrective mode yet again. Many of the stocks, for example, HDFC Life is still trading below its 200-day moving average. So I think in that sense also I would probably believe that the first real test of the breakout or the rally would probably happen when these stocks come back closer to their 200 DMAs and then they consolidate over there for a couple of weeks before they get into a breakout mode. So I think we could probably be in some distance away for these stocks to give a powerful breakout. As of now, it could be a meaningful bounce and traders could look out for maybe another 3 to 5% on the upside.
Okay, point taken. So that's a view on some life insurance companies. But Anshul, I also wanted your take regarding some of these housing finance companies. Our colleagues were telling us from the North Corridor that there's increased clamour of affordable housing. There will be some more announcements for the housing projects for rural as well. In view of that, would you take a bet on any of the housing finance companies, affordable segment especially?
Anisha, this is a very interesting space in our judgment. There are certain names in this space which are quite attractively priced. That's also largely because there is, either technical reasons for which they are priced low, or there are company-specific reasons which were temporary and which may go away going forward, because of which prices have been impacted adversely. In certain cases, there is because the prices are low because there is PE selling in those names. Private equity holders are selling in those names. That is keeping those stocks at lower levels despite operations showing significant uptake. Also, if you see the capital adequacy of many of these companies, they have as much as 40 to 45% capital adequacy, which suggests that there is substantial room for growth with existing capital. They don't need to raise incremental capital. In that scenario, if these companies have consolidated to 3 years, it offers an opportunity in our judgment. There are also certain companies which were down and out after the IL&FS crisis, where there were credibility issues and which have raised capital of late and trade at really ridiculous valuations where there may be opportunity going forward. So there are tailwinds in the sector. Prices are attractive in many sub-pockets of the sector. And we do think that this is an uncertain space where uncertainty should be attractive for the investor because prices are low because of the uncertainty. And so we are definitely positive on this space.
Right, okay, that's the take coming in on some of these buzzing names right now. Just get your status check of how we're, closing in on the market or on the day-to-day. Lifted off the day's highs, but again, that recovery also is now getting sold into because we're back down about 85 odd points. 23,240 is where we're currently at. You can see that downtick trickling in once again. Kunal, is this consolidation headed in for a bit of cool off? Or do you think it'll be largely flat or range bound for the next few days?
No, I think historically what we've seen is that whenever there is a sharp phase of correction, that's a zone where we see sectors, churning, and the previous sectors and the ones which have been rallying up higher, they tend to underperform, and then there are new sectors which emerge as a trend. But when stocks or when the indices rather go into a very tepid kind of a consolidation, which means a range of say 200 to 400 points broadly for the Nifty and 500 odd points to 800 odd points for the Bank Nifty, then we are looking at the same patterns playing out. It's just that the excesses which gets played out into the stocks and sectors when these stocks rally up by margin of 5-10% or for 3, 4, 5 consecutive days, those excesses get ebbed off. So I would probably believe that we are into that latter phase where potentially many of the stocks which have rallied up in the last 3, 4, 5 days and the underperforming ones, they could probably cool off for a couple of days before these stocks come back into a neutral territory in terms of indicators, and that's where I would believe that a better trade could originate for many of these names. So the view and the bias still remains on the bullish side for the indices. It's just that I think after this 1,500 point plus kind of a recovery, very fast recovery. I think we just need to digest these gains over here for the indices.
Okay, pause before you run again, digest these gains. That's the view coming in from Kunal. But in the meantime, a lot of stocks which are buzzing around, especially from the cement sector as we have been highlighting. But infrastructure as an entire theme has been doing quite well. And in fact, this is a conversation we had with the management of KC as well. They maintained their guidance for the entire year to be around 15 to 20% kind of growth. But margin is something which is expected to be closer to double digit by the end of the year. They're also quite positive on residential real estate. Listen into a slice of that conversation.
FY25, what we have talked about is that we should be somewhere around 7.5 or so on the margin side. And we expect that in Q4, when we are exiting FY25, we should be, closer to double digit between 9 to 10%. I think we are clearly very bullish on the residential sector. We operate with select large developers, but I think the amount of inquiries we are seeing, the amount of orders which we have, is very significant. Along with residential, we are also seeing some movement also in the commercial piece, which was not there. So I think between residential and commercial, I think we should see a good order intake.
Okay, let's take in some BTST trades before we wind up for the day. Kunal, what's your list like?
So I'll go with the buy in Laurus Labs. That's a stock which is inching towards a breakout about the 440 plus mark. So would suggest a target of 466. Stop loss to be kept at 433. And Aarti Industries is the other stock which is also giving a breakout in the hourly chart. So a momentum trade over here, targets of 700, stop loss at 650.
Right. Naresh, what about your BTST ideas?
So first would be a buy on Axis Bank, which is showing relative strength, stop loss at 1195, target price of 1230. Second is a breakout trade on Shree Cements with a stop loss at 26,950 and a target price of 27,600.
Anshul, Kunal, Naresh, great to have you guys on the show with us, and I'm going to hand it over to Vinny for the closing trades.
Not a great day, but you can see at least at the end of the day, Nifty closing almost at the day's lowest point, when you can see at one point of time it did touch those new life high levels. 23,411 is what we saw for the Nifty at one point of time, but right now 23,235, so clearly more than 150 basis points in terms of a fall that one has seen for the Nifty. Sensex 2 is down at 76,400 levels, and at one point we'd seen those 77,000 above that level Sensex for the first time, but yes, they did manage to hold on to some bit of a gain, at least for the markets. Not much of a move that they've seen in terms of gaining in terms of the momentum, and couldn't hold on to that gains. Even the mid-cap, that has also seen a fall coming in. The Nifty Midcap also will be closing in the red, down almost 0.04%, while in terms of the small cap, that's managing to hold on to gains still. That was the outperformer today, and that is what we've seen. Small cap, Nifty Smallcap index managing to hold on to 1.4% of gains. When you're looking at it in terms of the sectors today, we did have the IT names that were clearly under pressure. So Nifty IT also among the top sectoral loser today, down 1.8% in trade. So what dragged the markets today when you look at it? We had Infosys, TCS, all of them for the Nifty 50 which were under pressure. And other than that, we also had HDFC Bank, M&M, which caused some bit of a pressure on the Nifty 50 today. Other than that, we did see Emphasis making the list right now as well. Why was Emphasis in focus? What we understand is that Blackstone has sold stake in the company, and because of that, we've seen a lot of pressure that's coming on Emphasis in terms of a block deal that happened, and that was today. We'll watch out for the names of the buyers that have come in, but yes, keeping an eye out on that. Other than that, let's talk about some of the other movers that we had. Bharti Airtel, that has entered a $100 billion market cap club, so we're keeping an eye out on Bharti Airtel, at least some positive news there today. While in terms of overall cement stocks, they were in focus, rallying away and buzzing away in trade, keeping an eye out on that, on the hopes that yes, GST rate cuts is something that could happen in the sector, keeping all the stocks abuzz, whether you look at Aramco Cement, India Cement, Ambuja, JK Lakshmi Cement, all of them buzzing in trade. Raymond too, at one point of time, was managing to hold on to very, very strong gains. We've seen news flows coming in there. We had GAIL, which saw an uptick but then a fall again. So let's keep an eye out on what GAIL is doing in trade and where that is headed. GAIL is also down 2.8%. At one point of time, it was up almost 1.5%. So yes, we did see a fall coming in for GAIL. While other than that, on the back of auto wins, we've seen a lot of move for KC International, Aluwala Contractors, all of them in focus today on the back of auto wins. But markets not managing to hold on to any gain today, and clear pressure by the end of the day, not holding on to gains, the Nifty and the Sensex, keeping an eye out on that today.